Hello and welcome to Pro Trader Strategies Market Commentary for Monday, June the 15th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about everything from the economic to geopolitical and market analysis. I do the same thing in these daily market commentaries, but I layer on top of it these option strategies that I find, according to my rules or my guidelines, in order to implement those into our portfolio. That's how we're going to increase our overall yield there. Anyway, please remember past performance of any trading system or methodology is not necessarily indicative of future results. With that out of the way, let's get it on with this economic data. Across the pond, really not a whole lot to see there, but here in the United States, we did get a couple of them, and Empire State Manufacturing Index came in at negative 0.2%. Now that sounds pretty bad, right? Well, it was expected to be a negative 30, so better than expected there. That's actually the catalyst to giving the overall equity markets a move higher. I don't know why I've got MasterCard up here, although I am looking at a trade here. I do have covered calls in my MasterCard trade that I was considering taking off. But at this point, the market started rebounding and they've gotten away from me. I was looking to get a scratch on those calls, but at this point, I'll be happy to have those called away from me. Don't usually talk about my trades right off the bat, but I was looking at this right before we went on for the recording. So right now, my 300 calls in June, which expire on Friday, I'm going to let ride out, and if my MasterCard gets called away from me, I'll be happy to do that. I'm long MasterCard at 270. So just for that, usually don't talk about the trades right off the bat, but we will for this case because I was just now looking at it. Anyway, let's get on with the rest of the markets. We've got crude oil right now making a move off of the lows. We are seeing that get back to unchanged. We were seeing a lot of weakness. As a matter of fact, we saw BP speak today, I believe it was today, where they were saying that they are going to start making a move away from fossil fuels and into more alternative fuels much more quickly than previously expected. That's probably because they are not seeing any demand in crude oil, and it looks like crude oil is going to have a tough road ahead of it for any type of moving back into the 50s, which is where these guys are going to start seeing profitability on just crude oil. So with it back down in these low 30s, they're probably thinking R&D needs to shift away and start coming up with another way to make money. And then we're going to move over to gold futures. Gold futures are making a move off of the lows. I was a little bit concerned. This morning, overnight, we were seeing the equities make their lows. Dow Jones was down over 700 points. Well, gold was kind of not making that move like we would expect at a flight to safety, which gave me a bit of pause in the regards to, is this equity sell-off really sustainable if people aren't really flying into gold futures? That kind of sent off a light bulb moment where I thought that there was opportunity then in gold to as a hedge, I guess, if you will. It is a hedge on a pullback in equities. So I'll talk about that here in a moment. But then we got the bonds. They are in positive territory by a half point, moving back into that little value area that I've talked about, that I think that we are going to start consistently seeing more time and volume being spent. We're going to see a paradigm shift here in the point of control, I believe, with the markets and Powell talking about not raising interest rates anytime soon. So that leads me to believe that we're going to start seeing the markets move. Oh, it's way up here. Sorry. It's off my screen a little bit. And start to see some of this area build up in and around that 180 handle. So anytime we get overextended to the downside, you've heard me talk about it, down and around these levels, that just didn't seem sustainable with the way that the Fed was speaking, that their interest rates are not going to be raised most likely for another year at least, and possibly a few years. So that makes me believe that the bonds need to move a little bit higher and back up into this area between 176, which we are back in that area now, and as a ceiling that 183 handle. So I do believe that we are going to start seeing the markets kind of build up in and around these two lines in the sand right here. That line may be just a little bit low, but you get my gist that we're going to kind of stay within that area, build up some volume and open interest up in and around that spot there. Also, then we can move over to the other markets. Let's take a look at the VIX. VIX is on the lows of the day, as we were talking about. Overnight, we were seeing the massive sell-off in equities. Maybe not massive, but 700 points in the Dow is pretty big, despite the fact that that seems like almost becoming a normalcy here in the new world 2020. But VIX still up on the day, but well off of the highs. And here's what we're talking about with the Dow Jones Industrial Average. It's off by 230 points. But if we break this down into the daily chart, let's just go to a 30-minute candle. You can see overnight testing that low there, 24,409, and that basically putting the overall markets down with the Dow Jones by about 700 plus points. Same with the NASDAQ. It's looked like it wants to go back into positive territory after testing this Fibonacci that we have here. Market came down, tested that. Again, this was an overnight, but we came down, tested this area here. That is a pretty good sign that we are kind of working through some of this sell-off. Phoenix, this area that I live in now, is starting to see some spikes in the coronavirus, but I will tell you that here in Phoenix, you know, the way that we are as a community, it seems like are not wearing very many masks and things of that nature, and we actually opened up a little bit earlier than everybody, so we are definitely going to be the litmus test of how this whole reopening works out here. But you can see the NASDAQ on the highs of the day. E-mini S&P is very similar. We're right at the point of control. That 3,000 mark that we've been talking about is kind of the sweet spot. It's where the most time and volume has been spent. That being said, we are off that low, and that magnet is pulling us back. Keep in mind, we have a 200-day moving average lining up with that, and a Fibonacci. I don't think that those are going to act as much as a support and resistance. It may feel like it if you're not looking at it, the volume and open interest, but or this volume and time nodes, because they line up exactly there. It could look like we got above the support level or above the resistance level and are kind of hanging out there. It should be all hunky-dory to go to the upside, and then all of a sudden we go down below that support and hang out a little bit below that. People might be talking about that psychological level of 3,000 quite a bit, as volume's going to still build up there, and that is a magnet, so it's going to kind of mess up that support and resistance theory with those two, all those things lining up together. All right, E-mini S&Ps, here's another similar, looks very similar to what we saw with the Dow Jones Industrial Average overnight lows happening. Got a bit of a move higher as overnight inventory was relatively flat then at this point here at around 3 o'clock my time. And then on the economic data points for the Empire Manufacturing, I think that that's been the real impetus to get us to move higher. It's not nearly as bad as what maybe we were seeing with the coronavirus spiking here in Phoenix and a couple other states as well. So that's kind of getting brushed off. People are talking, yes, you're going to be wearing masks for quite some time. And these other places like New York are starting to open up their restaurants as well. So New Zealand, as a matter of fact, had fans in the stands. They haven't had any new cases, so they decided to have a rugby match with over 40,000 people showing up for that. And we'll have to see if they got any spikes after seeing that happen. All right, let's talk about my trade, and it's in GLD. I decided to play this to the upside with my thesis on if we see a big pullback again or start seeing some weakness towards the end of the day. I do think that we are going to see an influx into gold. Now, GLD does have a tendency to be a bit of a lagger behind gold futures, but I do think that this is going to be a pretty good hedge for that type of situation. Now, we talked about this on Friday, or talked about this on Thursday, I should say, of last week with my long call strategy. That's exactly how I set this up. I didn't use the in the monies. I used the at the monies. Well, they were slightly in the money, but the at the monies for the most part. And the reason why I did that is not only to capture upside move. And why did I do a call spread in there? Well, to limit some of my risk on that upside move. But the other thing is you're largely able to kind of isolate volatility. Now, do I know if volatility is going to expand and contract in this area? Well, a lot of times when we see a spike in gold, we see that volatility spike as well. So that would work in my favor. But if volatility comes out and we start trading along this side here, sideways trend, by buying a call and then selling that call just slightly out of the money there at about the 36 delta, the volatility coefficients aren't that greatly different. So in this particular case, I was able to do that, and I'm going to be able to offset that volatility. So it shouldn't necessarily hurt me if we start seeing that volatility come out, or volatility crush, okay? That's one of the main concerns when we're trading options, is that volatility coefficient, how it affects our premiums. That's what you don't usually find online or anywhere else, is really how it's going to affect our premiums. That's one of the things I talk about the most in these daily market commentaries and in my webinars, probably more so even in the webinars. So go and check those out at Pro Trader Strategies, our roadmap to building option strategies. And that's about it. Other than I got one more thing to go over, and that is the disclaimer. So please take a moment to read over this and know that there are inherent risks in trading options and trading in general. All right, so if you can't take that, take it easy.